Yeah.
Um,
I mean, I understand it's not cash.
Yeah.
I do, so, I'll ask it during that.
okay, Sarah, if you're
Okay.
ready, we'll do the roll call.
Yes, let's do that.
All right. Jerry Abrahams,
Here.
Commissioner Daum, Phil DeFranzo,
Here.
Timothy Hodges, Catherine McKinnon,
Here.
thank you. Commissioner Perez,
Sorry, I lost my mute button there. I'm here.
it does happen. Commissioner Perez, Franklin Perry,
Present.
Sarah Sanders.
Here.
We do have a quorum in attendance for this meeting.
And Dom, this is Alexandra Dom. I'm here as
Oh,
well.
thank you. I'm sorry I missed that.
No, I don't know if you missed it or I missed it, but I just logged on.
Thank you.
Well, good morning, everyone. Welcome to our Finance Committee meeting. It's a series of reports today, no action items, but importantly, we have our 2022 audited financial statements and results today. So over to Hazim.
Sure. Thank you, Sarah, and good morning, everybody. Before I hand it off to Tom and Lindsay from Whittlesey to present the audit result for the 2022 audit financial statements, I just want to provide the committee a recap of the audit financial statements. So you can see from the memo, this is more to supplement the information that I provided during the budget presentation. Essentially, we did more single-family loans in 2022 than 2021. We also experienced a net increase in the single-family portfolio by about 86 million in 2022, compared to a net reduction of 313 million in 2021. So what this means is we made more loans than we lost loan through payoffs. And then the other thing that I just want to point out is the thing about agency securities, because we do utilize agency securities. And as many of you have heard about stories regarding mark-to-market, regarding agency securities. So when it comes to CHFA, we don't treat agency securities as investment per se or buy and trade. We treat them as program assets or buy and hold. And agency securities act as a hedge against loan default. So while we do need to apply the accounting treatment and mark them to market, our bonds that funded the agency securities do not have a put option. Therefore, the need to sell agency securities is very slim. So in fact, you will see from Allison's report later when she provides her financial report, we continue to see a growth in the single-family portfolio. For the first quarter, we essentially purchased over 200 million of loans, consists of 88% of agency securities and 12% of whole loans, compared to only 79 million in 2022, or a 128 million increase quarter over quarter. With that, I'll open it up for any questions, comments regarding the audited financials. If not, I will hand it off to Tom and Lindsay to touch on the audit result.
I have a question, but I can't find my hand today. So, oh, here, I find it. There you go.
Yes.
So my question is, whether we use derivatives or whatever hedge we use to help us with interest rate or even losses, what kind of due diligence we do in those companies? Do we do any kind of due diligence from time to time?
Yes, we do. So when it comes to derivatives, we do have a policy where we require any counterparty that we enter into to have a minimum AA rating. So that's the first one. Then the second thing that what we do is we also look at the exposure we may have with such counterparty. And then we monitor that and on ongoing basis with our financial advisor.
So either a financial advisor or us, do we do anything beyond that? Because all the stuff you told me was worth not even a nickel, not even a penny back in 2008, 2010 in that crisis. And in fact, you know, what really caused the crisis is that a lot of those guarantees could not deliver, right? Because people made a lot of bad decisions. So do we look at anything like, especially with what's happening in the banks, you know, with some of the big banks, we had 3 large banks fell in a week. Even though
Right.
everybody talks about Silicon, it was actually 3 large banks, 2 in New York and 1 in California.
Right.
That those companies had any exposure. I know they probably had none to very little in Silicon because Silicon's type of loan mister was not residential.
Correct.
But some of the other ones, especially the one of the smaller one, which by smaller means it was still $180 billion. But it was the smaller of the 3, did have some residential. If they had any exposure to it and had that may impact us or not. And I'm not saying they did, because I've not done any analysis. I'm just curious. And because you brought it up and as part of the financials,
Right.
what kind of due diligence we do besides simply, you know, they had a AAA or AA, because if you remember, you know, AIG had a AAA, right? A lot of those companies that failed had AAA, right? In fact, we, Connecticut, with our help, the AG sued the 3 rating agencies, and we, you know, got about $30 million in settlement on it, because we're saying those ratings were not correct.
Correct.
And we won that, we won that in the court room.
Right. So when it comes, and again, so I want to make sure that we're comparing apples to apples, because the presentation or the statement that I made was focusing more on agency securities, and that's essentially is an investment that we hold and we pledge to the bondholders. But when it comes to managing interest rate, and your question is relating to derivatives and counterparties. So I would say that when we do have any exposure to any counterparty, we do perform those due diligence, at least in the beginning, to see, and then trying to ensure that we don't put all our eggs in one basket. So we do have some oversight in terms of how much exposure we're willing to get ourselves engaged with one particular counterparty. But in an event that if the counterparty does not perform or does not meet, we do have provisions, and then those contracts that we have right now in a high interest rate environment is actually in our favor. So they owe us money. But I do understand that if in an event that they fail, then the question is who's going to step in and perform their side of the ledger.
And my point is that the due diligence, and look, I think you do a great job, Haseen, right? And I'm not questioning your capacity or that you don't know what you're doing. But, you know, the market in the last 2 months has changed dramatically, right?
Correct.
Now, the way it changed, it might not impact our business model. Our business model may be a little different, but that's my whole point. That's why you go and check things from time to time and say, okay, we looked at it. Yeah, it was bad for some sector of the market, but not for us. And no, it didn't impact the companies that we do business with, or it did, but it didn't impact them in a point that we need to be concerned, right? Because even though a sector may not get impacted, if another sector that they do business gets impacted bad enough to hurt the bottom line, we should be concerned about it, right?
Correct.
And all I'm concerned about is not that we do great due diligence at the beginning and then we don't look at it when something major happens like Silicon Valley. That's what I'm saying.
Right. Yeah, I mean, I think Commissioner, well taken. I would say.
And I'm not saying you weren't doing it. That's why I asked the question.
No, I understand. But I also want to make sure and folks understand, committee understand, that we don't quote unquote audit the counterparties, financial statement and see because we just don't have the capacity and expertise.
And that's not what I'm suggesting, but it will not take a lot to be able to get from public information, or even for them, since we have a contract.
Right.
What's your liquidity? What's your reserve? That's not an audit. That's maybe asking 5 or 6 questions that takes maybe half hour, you know?
No, I understand. I mean, like, I will tell you right now that over the weekend, this past weekend, US Bank was downgraded by Moody's. They were downgraded one notch.
Right.
We are aware, and we do have a small exposure with US Bank NA. The one that got downgraded was the parent company, US Bank Corp. So it does trickle down. So we do monitor, and I think in terms of risk management, that's the reason as to why we have to have the capacity and the available net position to manage and to absorb any, fluctuation, so that if in an event that we need to extract ourselves, we have the financial means to do so, versus you're stuck. There's nothing that you can do. So the way that we manage risk is to make sure that we have option number 2 and option number 3 available if it comes to that.
And that's good to hear. I mean, has anyone assumed that, right? Because you know what happens when you assume.
Right, understood.
And because, you kind of touched on it, not directly. It triggered my mind because it was not only US Bank that had some bad news this past weekend, right? There were several other large banks that was announced that they increased their reserve because they're expecting to take a hit.
Correct.
And if you got banks like Citizens and some other large banks that have, 20 times your staff, right? Looking at this along, saying that they see, an issue down that tunnel. I always question why by statute they had the banking commissioner and the CHFA board, right? And during times like this, I understand better now why they do, right?
Well, we always love you, Commissioner.
I don't mean me personally. I mean the position.
Understood. No, I think that, when Allison goes through her investment and SWOT report, in that report, and this is part of the reason why, we want committee to ask this type of question, because we want to engage and to make sure committee members are well informed in terms of what we do and how we do it. So the report, when we get to Allison's side, it does include a list of the counterparties, and if you look at who we have as a counterparty, they are well capitalized, big major banks, either US domicile or is foreign domicile.
And 2 days before Silicon Valley fell, the stock was worth over 125 million, and everybody said they were extremely well capitalized. So
Right. No,
capital could disappear. Capital could disappear in 24 hours.
I understand. I mean, I think
Again, I don't mean to prolong this. I just want to make sure I'm not assuming, and again, I didn't come to this meeting to ask that question.
right.
Your
No,
comments indirectly trigger my mind to that,
Absolutely, and we again, like I said, we welcome all those comments, because our intent is to do the best that we can based on the information that we have at the present time, and
That's what you can do.
Correct. If anything changes, we just want to make sure that we have a plan, so we don't go in blind. We go in with our eyes wide open.
Yeah, but my biggest issue was that not that any one of us have a crystal ball, right? Or that we could predict the market, right? Because if we could, we would be doing different jobs, right? Or actually we'll be somewhere in the beach, right? Only an island, because we'll be multi-rich if we could predict the market. Is that we don't wait for an event to happen to trigger a plan that may not work because the people we're relying on may not be there, right? Is that we could try to minimize the impact by taking action prior,
Right. And then, even the derivatives that we did enter into, we have built in options for us to exit if necessary.
Yeah, because I tell you what, I went to a one-day capital summit at the Wall Street, at the stock exchange. And you had some of all the big time derivatives people, you have all the big time federal agencies that deal with this stuff talking about it. So they're concerned about it themselves,
Correct.
Well, thank you.
Thank you.
Hazim, my question is, and I'm sure we are doing the accounting methodology we're doing is consistent with other HFAs, so this is more, it's kind of like a.
This is Gatsby, yeah.
Yeah, it's, well, this guy, right, so these are program assets, right, you have to hold them as collateral for the bondholders, right, and they're more or less. The security that we have for our underlying loans, right?
Correct.
So it's essentially, it's an HTM trading strategy, so why don't we use an HTM accounting methodology? And so that we wouldn't have to run the changes in mark-to-market value, and you wouldn't have the fund balance swing.
So,
I know that was kind of a theoretical question, but
yeah, I mean, so, Tom probably can chime in along with Allison. But generally speaking, way back when CHFA adopted a particular accounting standards, and then when you try to report from 1 year to 1 year, you have to maintain that consistency, because if not, you then have to, I wouldn't say make any kind of adjustment, but generally speaking, there are certain standards that you need to follow. So we've always treated and then value and how we book agency security as mark to market.
And we do, I just want to chime in, we do account for that in the non-operating expense and revenue section of the financials. So it's kind of carved out from operations.
yeah,
Right.
below line.
I'll add that that's not an option for a governmental or nonprofit organization as well. The held to maturity versus available for sale
You still,
options.
yeah, you
You're
still have to
basically-
book it.
You're going to mark to market all of these securities.
Okay.
So that's your answer.
That's that, all right. Thought I was gonna save you $200 million a year in net income swings, but I guess not.
Don't be surprised if in the future, other organizations lose the ability to do that as well after the past couple months.
Yeah, but here in this case, I mean, not to state the obvious, in this case, if there ever was a justification for HTM accounting, arguably this would be it.
For sure. Yeah.
That's
I mean,
all.
it's really just a paper adjustment for us.
Yeah, no, I understand that. So,
Yeah.
all right, thank you.
Any other questions? Good. So Tom, take it away. And Lindsay.
Yeah, great. Thank you. Yeah, we have Lindsay Tesler here as well. So she's going to cover most of the presentation we have. Do you guys have it? Does somebody have it available to go through? Or do we need to share it?
No, stand by. Is it Lorraine?
Yes.
Can you move to the next item, the audit result? Yeah, you have to scroll all the way down. And then Tom and Lindsay, feel free to let Lorraine know, since she's
Okay.
piloting. It's all the way.
I got it, page 81.
Okay. So next page, go to the.
That's it. There it is. Okay, perfect. Yep. Yeah, why don't you hit the next page or two where you have our, here you go. So in front of you, this is our engagement team. You have myself. Lisa Wills is another partner at the firm. She does the second review of the audit of our work as well. So you don't necessarily see her, but she's part of the team as well. Lindsay Tesler is a manager with the firm, focusing on financial institutions and as well as some other quasi-governmental agencies that we work on. She's going to pick up in a minute or so here. And then our compliance manager, who focuses on the single audit work papers and the programs and the testing, is Naomi Aina, and she is another manager at the firm focusing on that. I will say, just as a preview, the audit went very smoothly. There are no surprises. We didn't have any concerns or issues identified, and we'll cover some more of those communications as we go on. But I wanted to assure everybody that everything was very smooth, especially for first year. We didn't have any difficulties getting information or meeting the deadlines or the time frame that was requested. So yeah, especially thanks to Allison for the majority of that as well. She definitely helped out a lot with the requests. The next page, if you can move on, is the overview. Like I said, no surprises here. The opinion is an unmodified opinion on the statements, and that basically means that there was no qualifications or any points of matter to communicate to you with the audit itself. Same goes on the major federal programs, clean opinions, no significant deficiencies or material weaknesses, either in the compliance testing or the internal control over the compliance or on the financial reporting. The state major programs also have the same unmodified opinions and results of the testing. We also use an IT specialist to look at some general IT controls for CHFA, and no issues identified there. It was our first year. We did not encounter any difficulties completing the audit. All information we requested was received timely and in full. And again, no issues to report for internal controls or compliance. And I think most importantly, no audit adjustments, either those that we identified or those that we passed on adjusting. So the records you've seen all along were the records that were finally issued, and no adjustments were necessary. With that, I'm going to turn over to Lindsay, and she's going to continue going over the information we have.
All right, thanks, Tom. As you mentioned, my name's Lindsay Tesler. I'm a manager here at Whittlesey. If you want to go to the next slide. So these are just some of our required communications. I won't read them all to you, but I'll highlight some of the more important ones. The significant accounting policies were appropriate and were consistently applied. We asked management to sign a representation letter prior to the issuance of the financial statements. They did that back on April 6th. Accounting estimates, the ones that we identified as significant this year were the allowance for the uncollectible receivables, net pension liability, OPEB liability, and the fair value of the swap portfolio. As Tom mentioned, no unadjusted differences or audit adjustments. We didn't know any instances of fraud or illegal acts. No material weaknesses were identified. We didn't have any disagreements with management. And as Tom said, management was very helpful. You know, Allison was crucial. We sent her all of our requests. She got back to us very quickly. You know, the first year we have a lot of requests, so we really appreciate how helpful everybody was in getting us everything very quickly. To our knowledge, management didn't consult with any other accountants, and we can confirm to you that we are independent with respect to the company. Moving to the next slide. This is just a lot of words. Most of this is covered in our audit opinion, so I won't go through this. If you want to move to the next slide, please. These are just some of the significant audit areas and transactions. Again, I'm not going to read through all of them. I'll highlight a couple of key areas. The first one being management override of controls. We went through and gained an understanding of your internal control over financial reporting. That included cash receipts, cash disbursements, the loan loss reserves, investments, debt, payroll, grants, as well as the financial statement close process. The other one I'll point out here is the interest rate swaps. There was no change to the valuation or the third party you use, BLX, but just noteworthy that it actually flipped from a liability to an asset this year. If you want to move to the next slide. Highlight here the federal and state single audits. The state this year, we focused on the time to own program, and the federal, we focused on the home owner assistance fund program, the housing stability counseling program, and the capital magnet fund. And as Tom mentioned, no findings, everything looked good. And I believe that is the end of our presentation. We're here if anybody has any questions, anything to add.
Sounds like everyone's happy.
No, I mean, it's the only bunch of words, as Lindsay says, so why bother with it?
Yeah. Well, I think it's a wonderful audit report for a first year for our auditor. No findings, totally clean, worked well with management. I don't think it could be a better report. So congratulations to CHFA management on such a good audit report.
And not to take away anything you say, Sarah, but I mean, this is a typical audit report for us. No comments and no findings, so it's not new. Not new. You
Well,
know?
we get findings over here in Treasury routinely. So.
Well, but we're not Treasury, we're CHFA. And I also read the ones from the state that the state does, so you're right. But we're not talking about the Treasury.
Yeah. Well, we get very few, but. Anything else on the audit? I think we're ready to go on to our financial reports with Allison.
Great. Good morning, everybody. Before you are the March financial reports. On the revenue side, mortgage loan and investment interest revenue are coming in 1.6 million above budget and 13 million higher than last year. Again, the year over year revenue variances continue to be driven on the increase in short-term interest rates. Just to give you an indication, March of last year, the stiff rate was less than 0.5%, namely 0.39%. And as of March 31st this year, that rate was 4.87%. On the expense side, bond interest expense is 1.3 million above budget for the month and 12.2 million higher than last year. There's several things that are driving this. Our outstanding bonds were $80 million higher than the same time last year. We had some redemptions last year that we did not have the first quarter of this year. And the amortization and also the increase in interest rates affecting our variable rate bonds. Administrative expenses are coming in 2.2 million below budget and 164,000 higher than last year. When you exclude salaries and benefits of 7.2 million, the current year expenses are 277,000 lower than last year. And lastly, the change in net position is above target by $1 million. Are there any questions?
What does that $1 million translates to? How many people?
I'm sorry. What do you mean by that? I'm sorry.
You say change in net position. Oh,
Yes.
no, okay, so that's not position. People position, you mean
Oh, right.
financial position. Okay,
Correct,
got it. I was reading it like too literal. I don't remember hiring that many people.
No.
Yeah.
So the continued below budget result on administrative expenses is, I assume, from just unfilled positions, unfilled FTEs.
Yeah, a lot of that is wages. We're approved for 148 positions. And as of the end of March, we only had 130 employees officially on roster.
Is that expected to last the year? Or
No, I mean, we are actively recruiting for several positions right now. So that will change. We expect that to go up.
Okay, thank you.
Mm-hmm.
Any other questions? We'll go on to the delinquency report with John Chilson.
Good morning. For the month of March, the authority purchased 256 loans totaling $55.3 million, of which 221 loans totaling $46.4 million were securitized, or 86% of March's production. The remaining 35 loans totaling $9 million were whole loans. The average loan size for March was $216,000. And the end of March, the mortgage-backed security portfolio balance was $2.3 billion, which is an increase month over month by $35.5 million. The whole loan portfolio declined through February by 8 loans. However, the principal balance increased from the prior month by $1.5 million. The overall delinquency rate for our single-family portfolio was 1.88%, which is a 16 basis point drop from the prior month. And year over year, our carrying balance of loans in foreclosure decreased by $6.6 million to $19.5 million, while the number of loans in foreclosure decreased by 39. For the month of March, the authority also funded 186 down payment assistance loans totaling $2.7 million, with an average loan size of $14,400. That equates to 73% of our March borrowers taking advantage of the down payment assistance program with their with their mortgage. Authority also funded 172 time to own forgivable loans in March, totaling $5.1 million, with the average loan size at just under $30,000. For our multifamily portfolio, there were no new loan closings in March. The total number of loans remained 561 for a total of $1.3 billion. Our delinquencies are also unchanged, with 6 permanent loan delinquencies, 1 construction loan delinquency, an overall delinquency rate of 1.2%. Any questions?
If there are no questions, we'll move on to our next report, investment and swap reports. Allison Murphy.
Good morning again. The first quarter of the year, we saw an increase in the book value of our investments by approximately $88 million, bringing the portfolio balance up to $3.5 billion. We also experienced an increase in weighted yield to maturity from 3.49% to 3.67%. On the swap side, there was no change in the number of counterparties or number of swaps in our portfolio from last quarter, remaining at 42 swaps with 8 counterparties with a notional balance of $947 million. The quarter over quarter weighted average pay rate remained the same at 3.02%. We saw a decrease in the market value of our swap portfolio from last quarter, with this past quarter decreasing by $20 million down to $6 million. Are there any questions?
I have a question. We've talked in the past when with the higher interest rates and the swaps now being in the favor of CHFA, it could trigger counterparty collateral posting requirements. And you kind of indicated what I expected is that they're probably reluctant to do that. Have you been successful at getting them to do that? Have any been required to do that? Have they met the thresholds that are required for that? Or are they all trying to get out of their collateral posting obligations?
So let's go from the back. So none of them have met, or the document wasn't triggered, so they don't need the collateral. Just because that there's 2 things. One is the one that you mentioned about the valuation and the position. The other one is ratings. So generally, the CSA or the credit support annex that we have with counterparties are around 50 million. Not all of them are at 50 million. So if you look at the report, we're still a bit way off from 50 million. But going back about the discussion, one counterparty did reach out to see if or just trying to get our understanding in terms of what's available on the table. They did not say that they were not willing to pay, but they were just trying to see if there's something that CHFA would entertain in terms of the portfolio. So does that answer your question, Sarah?
Yes, that's good. You haven't reached the triggers, but 50 million is a pretty high trigger. Is that what I'm hearing? The trigger's 50 million?
Yeah, 50 million.
So under that, you're not collateralized?
Correct. Right.
And that's per agreement?
Right. So what happens is, like, if you've seen a CSA, they have this grid where depending to who your counterparty is, some of them are indefinite, but generally any is the contract that you enter into, they would have those triggers built in where it will be rating and amount based. So depending to the counterparty's rating or the portfolio marks, then you look at the grid, and if it's triggered, then yeah, either side have to post.
Yeah. That answers my question. Thank you. Any other questions? Okay, if there's no more questions, we'll move on to the approval of the minutes of the Finance and Audit Committee on March 30th, 2023. May I have a motion?
I move it.
Second?
Second.
Thank you, Kathy. Roll call vote.
Jerry Abrahams,
Aye.
Commissioner Dahm,
Aye.
Phil DeFranza,
Yes.
Timothy Hodges, Catherine McKinnon,
Aye.
Commissioner Perez,
Yes.
Franklin Perry,
Yes.
Sarah Sanders.
Yes.
The vote passes unanimously.
Okay, any other matters?
So just want to point out that Tom and Lindsay are also going to provide a much briefer summary to the full board regarding the audit result.
Okay, maybe it's just me, but my Outlook invite, Nandini, from Dawn, it says 10:10 for the full board meeting. So I don't know if I'm the only one that it shows up that way. You might have some people coming in late. I'm just I'm not
Yeah.
gonna-
Thank you, Sarah. We're gonna look into it, and if
Okay.
need be, we'll send out an email right now to all the board members and right, Dawn, we're gonna look into it.
Absolutely. We'll try and figure out what happened there.
Yeah. Okay,
Okay.
thank
no
you.
problem. Then I'd ask for a motion to adjourn. All in favor, say aye.
Wait. I just want to make
Aye.
sure the meeting is going to be at 10, right?
Yes, it is. It's at 10.
Okay.
Sorry for any
Like normal.
confusion. Not sure what happened, but
And as you know, in my case, it doesn't take much because of the problems I've been having with the emails. I mean, with the Outlook folder.
understood.
Yeah. The invitation I have says 10 o'clock on my Outlook. Yeah, that's weird.
Might just be me. I don't know. Things happen to me all the time. Okay,
Thank
All
you.
right. See you soon.
Yep.
Bye.
Bye-bye.
bye-bye.